Most people think that storage only pays once you own the facility. But here's the truth. There's actually a hidden cash machine sitting inside of almost every good storage deal. And you can tap into it before you ever own a single facility or a single unit. I've done it myself. $33,000 plus equity on one deal, $150,000 on another. Just recently, $25,000 on one single deal. And I've actually coached Storage Wins clients who have made six figures this year doing the same exact thing. Today, I'm going to pull back the curtain on how these paydays happen and how you can actually do it the right way and the mistakes that can kill your reputation if you don't know better. So with that being said, let's dive in. I didn't plan on wholesaling storage. In fact, it's kind of ironic because I spent 14 years building a single family wholesaling operation and had closed north of 750 deals. And in 2020, I decided to shut down a profitable wholesaling operation here in South Florida. And I left the single family world because, to be honest with you, I was tired of chasing deals. I felt like I had built a business that was on a hamster wheel, and every single month I was riding the income roller coaster. I was chasing deals, I was starting from zero, and just going from deal to deal, transaction to transaction. Then my very first storage transaction just a year later, summer of 2021, came to be, and it was actually a wholesale deal, believe it or not. My very first storage deal was the same strategy that I had gotten away from, that I had perfected for 14 years. But this time it was a little bit different because in storage, when you find a great deal, you're not just flipping paper or assigning a contract. You're connecting people, you're solving problems, you're getting paid like a real business person because storage is an actual business. So look, if you're watching and listening, and clearly you are, and you want to generate more cash flow, you want to generate more cash in the next 60 days to 6 months, then this is the exact episode that can be a complete game changer for you. Let me start with a super quick story. A couple of years ago, I was packing for a family trip, and right before I left, and I was going to be going away for 3 weeks with my family, literally days before I hopped on a flight to Europe, I got a call from a lady in Louisiana. And she mentioned to me, she said, Alex, you sent me a letter a couple of years ago. Now, mind you, for perspective and context, a couple of years prior to 2023 was around the time I started in self-storage. So I think it was one of my very first direct mail campaigns, which, as an aside, one of my favorite ways to go direct to seller and get off-market storage deals. But that's neither here nor there. This lady went on to tell me that she kept my letter because she felt it was very personable. And in fact, I've created a YouTube video and walked people through exactly why I think that letter was so successful. And we'll go ahead and link it up here. So 2 years later went by, and she sat on the letter, and because she said that, look, I felt like I wanted to sell the facility, but the timing was off. And so I'm calling to see if you're still interested. And she owned about a 21,000 square foot facility in a small town in Louisiana. We built rapport, we connected. I got some basic information, asked her what she was looking for. And she told me, I'm looking for $400,000. I didn't negotiate with her. I knew the deal made sense. I was giving her exactly what she wanted. And I didn't actually lock up the deal on that phone call because, again, I was going to Europe. She was traveling. But as soon as I got back, we connected on a call, put the deal together. And about 31, I think a little bit less than 31 days, actually, I think it was like 29 or 30 days later, I ended up wholesaling that deal to a friend of mine for $550,000. I generated $150,000 net profit on one single deal. Now, what made this interesting is that her attorney actually didn't allow me to assign my purchase and sale agreement. So what my attorney helped me do was we ended up creating an LLC. We created an entity in Louisiana. And then at closing, I sold 100% of the interest in that entity over to the buyer in exchange for the $150,000 fee. We disclosed everything to all parties involved. It was fully transparent. It was legal. And as my disclaimer, always consult with the pros. Whenever you're looking to structure something, have a conversation with an attorney. Make sure that you're doing things the right way. But now that we got that disclaimer out of the way, this was my very first six-figure wholesale deal with a storage facility. I had done multiple six-figure wholesale deals in the single-family world, but what I have come to learn is it's actually a lot more common in storage. Typically, the wholesale fees come with an extra zero. And it taught me actually didn't teach me that because I had already done a bunch of deals, but it reminded me that what you want to do is control the asset. You want to get really, really good at finding deals. And then when you can control the deal via a contract, you can dictate more oftentimes and control the outcome. So look, here's the big idea. Most people think that you need to own storage to make money. And people typically transition and get into storage because they want cash flow, they want more time freedom, they want to build wealth, they want to take advantage of all the tax benefits. And that's all very true. That's exactly why I got into storage. But what people tend to not think about or overlook is that if you're in a position where you just want to generate a bunch of cash in a relatively short period of time, the next 60 days to 6 months or even a year, all you really need to do is focus on finding great opportunities and connect them with the right buyers. So one of the reasons wholesaling storage works, and it works so well, is because there's less competition than in the single family space. Like I just mentioned, the spreads are typically bigger. You can add a zero to what most wholesale deals in the single family world are. And it's built on relationships, not volume. When I ran my single family business, we were wholesaling at our peak. I think we were doing like 60 to 70 deals a year. In storage, if I can wholesale 1 to 3 good deals a year, I mean, that's a pretty solid year when it comes to just generating some transactional income on the side. It's the same exact process to find these opportunities, to underwrite them and analyze them and ultimately put them under contract. What changes is the fact that you likely won't be the one going through due diligence and you're going to find the right buyer. I call it the hidden cash machine because once you learn how to spot these opportunities, you can create cash, you can create cash flow and freedom on demand in some cases without taking on debt, any liability, tenants, the operations, taxes, insurance, etc. So look, I'm not going to teach this like a course. There's actually something really, really cool that I'm working on that I am not yet ready to reveal, but make sure we're connected on socials, on Instagram. Make sure you're part of the Storage Wins Facebook group so that you get notified and that you're on our email list because I think this is going to interest you. But with that being said, think of this as a lens, and I want to cover a 5 simple step process that turns hidden opportunities into paydays. And I'm gonna be 30,000 foot view here because I want you to fully understand the picture and just believe that this is possible because not only have I done it, just yesterday, I had a Storage Wins coaching client. I almost don't want to share this because I can already hear the cynics saying that's not possible. I had a husband and wife team that I met at a mastermind years ago that we got reconnected because of storage. Great people. And they joined our community early September. 31 days later, they went under contract on their very first storage facility. And they found the deal because another Storage Wins community member was wholesaling it to them. And I just got word yesterday, 59 days after they joined our community, they officially signed the papers and closed on their very first storage facility. And it came from a wholesaler inside of our community. That same person has wholesaled 3 deals this year alone, totaling over $200,000 in profits. And it's because he got really, really good at finding deals. He became a professional problem finder and problem solver. Now, look, you may already know the playbook, right? What we teach inside of our Storage Wins community is our deal discovery process, the deal flow. And one of my clients found his very first wholesale deal by just zooming in on the satellite view, found a mom and pop storage facility with no website, made the call, ultimately after a series of calls, ended up getting it under contract. So the big idea, the big takeaway is get really, really good at finding these opportunities. Step 2 is you want to filter the opportunity. It's something we call the deal filter system, where you don't overthink it, but you confirm that there's a value add opportunity. Meaning when you buy it, there's value you can add to increase the net operating income, which is what drives the value of the business. You're looking for solid income, demand in the market, the right demographics. I've touched on this in previous podcasts and YouTube videos, so I won't dive too much into it. But remember, the higher the cap rate, oftentimes that could come with higher risk, but also higher reward. The lower the cap rate, oftentimes lower risk, but lower the reward. All right. Step 3 is you want to control the deal. I like to start with a simple LOI, a letter of intent. And then once we iron out the framework of the deal, then we can move that on to a purchase and sale agreement. Once it's signed, you now control the deal. You have equitable interest. You control the asset without owning it. And that control gives you the right, provided that you have that in the paperwork, that you can assign it. And if you disclose it, market it, find a partner. And more on that in a bit here. But step 4 is you want to connect with the right buyer. And I want to underline, highlight, italicize, put in bold the word right. Here's where the cash machine kicks in, because you're connecting your seller to the right buyer. And we're going to unpack here 6 proven buyer channels in a quick moment here. So stick with me. Step 5 is you want to collect with integrity. And this is the key difference between doing a deal and building a relationship. If you get nothing else from this video and podcast, get this. Think long-term and relationally. Don't think short-term and transactionally. Be transparent, close to the reputable title company or attorney. Make sure everybody walks away feeling good. You want it to be a win-win-win all the way around for everybody involved. So let me just go ahead and put this out there. You do not need a massive buyers list to wholesale a storage facility. What you do need, though, are reliable channels. So I want to share with you 6 ways that you can market a contract, essentially move the opportunity, and I'm going to rank them by speed and control. So number 1 is you can submit the deal to me. What do I mean by that? Well, somewhere here you will find the link where you can actually just give me some basic information. If you have a deal under contract, send it over. I'm an active buyer. If for whatever reason the deal doesn't work for me, I have an entire community of awesome people inside of Storage Wins that are looking for deals. And so even if it's not a fit for me, I might be able to connect you with the right buyer or somebody in my network. It can be fast, clean, and simple. So make sure that you click the link somewhere on here, look for it in the show notes, wherever the case might be, and make sure you submit the form, but only if you are direct to the seller and you have a storage facility under contract. I'm an active buyer, and I have others in our community who are actively pursuing their next storage deal. Number 2, inside of the Storage Wins coaching community. If you are one of the select few who has been extended an invite to join our coaching community and you're a part of it, then you already probably know that there's deal flow happening in there. There's been numerous deals already wholesaled to people in our community from other community members. People are buying deals. People are lending money, partnering. Members know each other. Trust is built. And people do what they say they're going to do. So my favorite way to see people in our community win while also helping sellers, brokers, etc. Number 3, and this is free to join, make sure that you're a part of our Storage Wins Facebook group. It's full of hungry, active buyers. What I would encourage you to do is when you post a deal that you have under contract, be very direct and clear and include all the information that a real buyer would want to know. The address of the facility, the name of the facility, the wholesale price, the unit mix, the highlights, photos, videos, the financials. Don't just post, hey, I'm wholesaling a deal for $800,000. Who wants it? And not put any other information. All right. I would also encourage you. Now, I'm a little biased. I happen to think Storage Wins is the best storage Facebook group out there, but there are other storage groups out there, and those can be really good places to connect with other buyers. When you do see people post a deal and you see a bunch of people drop their email in the comments, then you can message them and say, hey, listen, I'm a storage wholesaler. I'm actively marketing for deals. Would you like to be put on my buyers list? More times than not, they're going to say yes. So make sure you get their name, their email address, and ideally their mobile number, because if they allow you to text them, it's another way you can communicate with them about any future wholesale deals that you might have. Number 4, your email list is the most valuable asset you can be building on a day in, week out basis. Okay. It's your long-term leverage. Social media channels can be taken away from you at the snap of a finger. I've heard it. I've seen it. So don't just rely on social media channels, but your email list, provided you have the spreadsheet and you have the CSV file, then you always have it. And you might not be on a particular platform, but you can upload that to another platform. So Every time somebody raises their hand, DM them, ask them for permission, and be building your email list on a day in, week out basis. It's an extremely valuable asset in your business. And over time, your list can become an ATM basically of trusted storage buyers. Number 5, if the deal supports a fee, okay, and you trust them, talk to the broker and see if a broker has a buyer looking for a deal in that area. Be upfront that you're not looking to list the deal. You're not the owner. You merely control the deal because you have it under contract, and see if you can come to an arrangement with a broker. And depending on what the deal can afford, again, have a conversation with the broker, be upfront, and they might have a buyer in their pocket that's looking for an off-market deal that you can be the bridge and the connector to. Number 6, and here's the caveat and disclaimer. This comes with some risk, but I think it's going to be a bridge to something that I'm going to share with you when it comes to wholesaling. And that is competitors in the area, in and around the area of the storage facility that you're wholesaling. Why? Well, they already know the market. They know what they already own storage in that area. But look, if you go this route, make sure that you've been completely transparent with your seller, right? And that the seller knows that you're not ultimately going to be the end buyer. Otherwise, you're going to risk killing the deal, burning the relationship. Why? Because chances are the competition, they know the owner of that facility. I mean, it's a competitor. They're in the same market. So don't expect that they won't know each other. That's just something I don't typically go that route, but I wanted to put it out there because those people are potential buyers. So let me share with you now, and I want to touch on some quick landmines to sidestep. And it kind of builds on what I just shared, and that's hiding your intent from the seller. One of the biggest challenges I have with wholesalers is that they're kind of sneaky about it, and they're not transparent with sellers. So be honest. If you know you're going to wholesale the deal, let the seller know that you work with a group of trusted buyers and that you're all looking for storage deals, and that this one may not be for you, but you may buy it yourself. You may buy it with a partner. You may have one of the partners that ends up being the buyer. I think it's not so much what you say. I think it's how you say it and the trust and rapport that you've built with the seller. But don't be sneaky about it. Don't make them think you're the buyer when you know you're not going to be buying that deal. Okay? Number 2, I think, is picking the wrong buyer. And I like to interview buyers because when I get a deal under contract, I have a certain amount of due diligence. The last thing I want to do is assign my contract over to a buyer who's not credible, reputable, doesn't have the means or the ability to close, doesn't know what they're doing, and potentially eat up a bunch of my due diligence time right before that due diligence period expires, have them come back to me and say, hey, Alex, I can't move forward in this deal. Now I'm up the creek without a paddle. I've burned up my due diligence. Hopefully, if I know what I'm doing, I have a backup buyer in place, but I may need to go back to the seller and negotiate on a longer inspection or due diligence period. Not the best place to be in. So make sure that you build relationships, dig your well before you're thirsty. Ask them the hard questions. Hey, what's your experience? Have you closed storage before? If they haven't, that's okay. But how do they plan on funding and financing? In other words, is their balance sheet strong? Do they have the ability to go to a bank and get financing and be able to are they putting money down? If so, how much? Where's the money coming from? Is it actually liquid in their bank account? Like they could send the wire today, or do they have to source it or borrow it from somebody else? There's not a right or wrong, but ask the questions and get a feel for that person, because picking the wrong buyer can really mess up your deal. Number 3, I would say is sort of weak deal packages, right? One of the things I like to do when I'm wholesaling a deal is create a 5 to 7 minute Loom video giving the highlights of the deal. Think of my wife and I, whenever we're going to get into a new Netflix series, which isn't that often these days, but when we do, and we're not sure, what do? We jump on YouTube, we watch the trailer. Does it pique our interest? Do we even want to devote the time and energy to watch this? Think of your 5 to 7 minute Loom video the same way. Make sure that it's comprehensive in terms of what's included. Of course, the address, the name of the facility, the net rentable square footage, the lot size, the year built, a market overview, competition study, your underwriting analysis, of course, the wholesale price, photos, videos, all the financials that they're going to need. So that's super, super important. We, in our Storage Wins community, we like to use a very simple 2-page Google Doc that summarizes everything very neatly and cleanly. And then look, letting perfection kill momentum. Your first deal is not going to be perfect. I mean, your 5th deal is probably not going to be perfect. So what do I always say? Progress over perfection every day and twice on Sunday. Now look, inside of our Storage Wins community, I've seen people wholesale multiple storage facilities just this year alone. Like I mentioned, one particular community member over $200K in 3 wholesale deals that he sold to other storage winners. No ownership, no tenants, no toilets, no operations, not messing with any of that. Another member got a deal under contract, created a very simple Loom video highlighting the opportunity, marketing, photos, key terms, sold it within 48 hours. These are regular people, nothing special. They literally just followed this process, what I'm sharing with you here. They stayed consistent. They built relationships, because the hidden cash machine, this what I'm talking about here in storage, this isn't just deals. This business is built on relationships. So look, in closing here, wholesaling storage facilities isn't just about quick cash. It's about mastering the skills that are going to build long-term wealth. And that's being good at finding deals, quickly being able to evaluate what's a deal, what's an opportunity, and what's not, having meaningful conversations with sellers, building trust, and connecting opportunities with capital. So whether you keep the deal, you partner on it, you wholesale it, maybe you wholesale it and retain some equity, like I shared at the beginning of this video and podcast, the skill set's the exact same. And once you have it, you can write your own ticket. You can literally write your own ticket. So look, if you've got a deal under contract and you want a fast, honest review, use the submission link in the show notes or the description. If you're serious about learning how you can find, fund, and profit from your first storage facility, whether you wholesale it or own it, head over to storagewins.com. We'll schedule a quick discovery call. And look, the faster you learn how to find deals, how to get really, really good at the deal discovery process, the faster you're going to be able to unlock your own hidden cash machine.